Hello, this is James Smith at GannAnalysis.net. Today I want to talk about the transports. DJT is the ticker. The theory is that where the transports go, the Dow will follow. This is Dow Theory. So if you have the transports rally to a 50% retracement, form a high at that 50% mark, and then begin to crash, the theory is, from a Dow theory perspective, that the Dow should follow the transports. So if you've noticed the last few days, the Dow keeps going up. What's not to like? If you listen to talking heads on CNBC and Bloomberg and CNN, they'll all tell you, most assuredly, the stock market will keep going higher. But if you look at the charts, instead of listening to the talking heads, you look at the chart and you say, hey, 50% retracement. We just failed at a 50% retracement. And those of you who follow Gann know that the 50% mark is the most important retracement for Gann. So you had a big sell-off. You rallied back. You took back half of that move, and then you crash. So if the transports are going to crash, then the Dow is going to crash. You have to know that something doesn't fit here. And what is that thing that doesn't fit? I think I know why the transports are going to crash. I'm not going to tell you why. My clients know why. I've talked about it a lot to my clients, but some of you probably figured it out by now. Has something to do with the square of 9, which I covered a week ago. November 22nd was 2/3 of the way through the year if you start the year with the spring equinox. So 1/3 late July, 2/3 would be November 22nd. That was a very important day for some market. I'm just letting you know there's something going on here that's far bigger than what you're being told by the talking heads in the media. But this chart, if you look at it here now, you can see here, this is through Wednesday, November. And guess what? That does not include the 28th. This is the 27th, which is Monday. On the 28th, it's down here somewhere. It actually is continuing down. So it's pretty emphatic what the transports are telling you. But interestingly enough, that's not what you hear in the markets, not from the talking heads. Another reason I would keep in mind here, you have a 30 trading day cycle. If we anchor from August 16th, every 30 trading days you get a turn. And the next one comes due on the 7th of December, which would be a week from Thursday. So even if you try to rally back, I don't think you're going to get above this 50% mark. I think you rally back for a few days and boom, then you go down. Or, hey, what's not to like? Maybe you just crash and burn and continue on down. All I'm saying is the cycles are telling you there's no escape. Now, if I'm wrong and you close above 15,094, then yeah, okay, it didn't work. But I looking at a few other markets, adding up the pieces of the puzzle and seeing how they fit, this looks pretty good to me. This rejection of a 50% mark is very important for Gann. And if you get follow-through selling, as we've seen here on the 27th and 28th, and say the 29th, let's say tomorrow you sell off again, something's going on. Even if you try to rally back, it'll probably just be a lower high, and then you'll really crash after the 7th. So that's kind of interesting. And if you look at the Optima is a software that I'm using, and they have something called Optics Bands. It's a momentum indicator, not unlike RSI momentum and stochastic, etc. You have an overbought and an oversold area. I like this. It's a fairly, sensitive instrument, and I've noticed from working with it that, hey, if you look at this high here, look at this thing going down. it really captures the spirit of what I think is about to happen. This thing is just falling off a cliff. And as it continues down, what it's telling you is that the price is also going to continue down. So I also like the fact that it rejected this lower band of the overbought zone. Pretty much sometimes you get the high up here and boom, you start going down. But hey, this one, you never even got close to this high. Sometimes the bigger sell-off comes when you fail at that lower band, which is, I think, what we just did. So I like it. It's not Gann, but you don't have to do just Gann. You can do other things. So momentum indicators are a nice complement to Gann, especially when you got 120 calendar day cycle down from high, 216 calendar days up from low, and you're failing at a 50% retracement. Nice setup. Also 288 trading day count from this low into November 15th. Again, right in here, you're failing in sync with the cycles, and you have nowhere to go but down. So as it starts to gain downside momentum, don't be surprised if the talking heads start moonwalking back on their rosy forecast into year end. The same knuckleheads that are telling you to buy the market now, they're going to reverse themselves big time, because you cannot lie in the chart. The charts don't lie. That's the job of the talking heads. And the talking heads, sometimes they're just wrong, but sometimes they're talking their book. They're telling you to do something so they can offload the stocks easier. I don't know what their motivation is. I just know that the charts don't lie. And you failed at the 50% mark, that's a big sign that this thing's in trouble. If you want to prove me wrong, wait for that close above 15,094. I'll be happy to admit, hey, I got it wrong. But until that happens, I'm going to go with the idea that transports, according to Dow Theory, if they're falling off a cliff, even if the Dow is going higher, it's the transports that are warning you, red flag, something bad is about to happen that's going to take the Dow down. So this is kind of fun to watch. Get ready for some really crazy action in the stock market. This is going to be a lot of fun.